What is up, guys? Welcome back to my channel. Nikki here, and in today's video we're going to be talking about why dividend investing is way better than growth investing, and you already know the drill. Let's get it.
Ooh, big bag. You not talking money, you can miss me with the chit chat. I'm not with the rah-rah or the
Now, real quick, before I have the keyboard warriors come at me, you're crazy, I can get 1000% return in 3 days in growth and you can't. Honestly, yeah, growth has a purpose, and growth is not a bad way to invest. But dividend investing, in my personal opinion, is way better, and I'm gonna tell you why. But first, let's do a little education, okay? Let's do a little something about what a dividend is versus what growth even is, and how the investing actually differs. Dividends. Now, dividends are returns that a company gets, so property, money, cash that a company gets that is then given back to the shareholders, me and you, in the form of a dividend, okay? It is cash flow. You are then getting a piece of that company's revenue every single either month, quarter, annually, whatever their dividend schedule is, without having to touch your initial investment. Yes, you make money and actually make money without having to sell your shares, which is a huge thing that growth investing cannot say it does. All you have to do, put your money in, set it, forget it, get that sweet cash flow and reinvest it. That's literally it. But now growth, on the other hand, the revenue from the company, the cash that is made and profited by the company, is then reinvested back into the company. You do not see that money hit your account, okay? You don't see it. And they do this so they can grow the business, which obviously makes sense, because when you buy a share of a growth company, a growth stock, you are hoping that management reinvests money and grows the company, so that way your share price appreciates over time, makes more money. And I put it in quotes because you know what? You don't see it unless you sell it. So yes, you may see a 20, 40, 80, 1000% return, but you don't actually see that in your account until you liquidate your positions, whether that be entire positions that you hold, or if you're just taking out your initial principal investment, which is the initial amount of money that you put in. Growth is very appealing because you could take money and make that money into a lot of money relatively quickly, as long as you sell it and actually cash out on your position and your investment. So why would I sit here and say that dividend is better? There's honestly a multitude of reasons. The first one is cash flow. Actual money, an actual return of your investment that is seen without you touching your position. I can't emphasize this enough. The fact that you do make an investment and you see a return on that before you even touch the investment is something I think is seriously underlooked, and I think you should really give it a glance over, really self-evaluate with what you're doing, because honestly, that is where money is made. Second thing is, they actually historically, dividend stocks will outperform growth stocks. 3, they are less risky than growth stocks. And this makes sense because with good paying, high quality blue chip dividend stocks that have been doing this for decades, it shows that they have good financials. They are comfortably financially sound, and sometimes the growth companies cannot say the same, which is my fourth point, that these companies have steady cash flow. They're usually stronger in that sense. They're well established. They have a history behind them. And to kind of piggyback off the second thing I mentioned about how they outperform growth stocks, go ahead and check out this right here. You can see in the chart that dividends accounted for well over half of the market's returns. And this can happen when the stock prices stagnate or decline over a period of time, yet the dividend income continues to come in. So if you're looking at this chart, you can see, just look at the okay, we're going back to the 1940s, but check out the 1940s. With the dividends, 67% of the returns were the dividends, all the way up from 1930 to 2017, 42%. So you can see that dividends really do make up a huge part of the average annual total return in the stock market. In decades, years, months, whatever it is, that we're in bearish markets, when markets are not returning what they should be, at least the averages of what they should be, these dividends, they seriously help your portfolio to continue to grow. And honestly, I expect us to probably have one decently soon. And I just think dividends are a great way to kind of offset that pain, okay? Offset the hurt when you're looking at your account and you're down 10K in a day because all you do is invest in freaking stuff that doesn't pay you cash flow, which is like beyond me. Then the next thing I'm gonna touch on that I don't think honestly a lot of people really but like really think about is the compounding difference between investing dividends back into your account versus not having those dividends at all. Check out this right here. You can see if you were to invest $10,000 $1,000 into a dividend stock that had an average annual return of 12%, which honestly is a little bit high, I will say. They're giving you a little bit of juicy percentage there. And you reinvested the dividends in 30 years, the investment would resolve just shy of $300,000. But if you invested $10,000 in a non-dividend paying stock with the same 12% return over the same amount of 30 years, your total return is only going to be $132,676. That's $167,000 that you are missing out on because you don't want to buy dividend stocks and reinvest those dividends. Golly, y'all. I don't know. I mean, what else do you need to see here? And then the final thing that I want to mention why I feel like dividends are better is because there's really honestly less to think about. I'm no damn professional. I never claimed to be. And dividend investing is the easiest thing you could possibly do. Quite frankly, I'm surprised I've been able to make this many videos about it because it is simply kind of boring. But it's less to have to panic about. It's less to have to really dive in, figure out, should I buy here? Should I sell here? What if I hold a little longer? There's less emotion to have to really deal with, like greed and fear of missing out and frustration and all those things that kind of come with growth event. Trust me, I tried a daily options trade, okay? And a lot of that comes in because it's very short term. And I feel that struggle and that pain. I can only imagine if I invested in something that's at $20 and I hold it and it goes to $40, I get my return, I don't sell it. I'm like, oh, it could go higher. And it falls back down to $10 and I'm like, okay. There's honestly nothing worse than that. Like, that sucks. And so with dividend investing, you can really just lay your head down, take a nap, go to bed, wake up in 10 years, and you're gonna be fine. Just set the drip on because we don't want to miss out on those reinvestments. And quite frankly, now with stock investing being what it is and the platform that it has, people are always looking for that next best thing, okay? They're trying to stress you out. They're trying to say, buy this, buy that. You know, this will 100x. If you miss Amazon, get this. If you miss Tesla, get this. It's too much. It's too much. Sure, have a separate account if you want to mess with this kind of stuff. I think it's cool. We learn a lot. You can make some money. It could be fun. But I will say, I personally feel like you need to be investing in dividend stocks and really making that the long-term goal. Have some fun along the way, but take it seriously because you can miss out on a lot of money by not doing this. Plus, if you're trading, you're doing growth, you're making good returns, you're selling at good points and taking lots of profits, put those profits into dividend paying companies and you're set. You're rocking and rolling. Damn, you're gonna be just fine. Do you agree? Do you disagree with me? You can hate on me for this one. I'm not saying growth is bad, but I just think people really overlook dividends because they're not as sexy and you can't, 10, 20, 50, 1,000 extra return in a week or two or month or whatever. Let me know down below if you think I'm nuts. Also, if you like making money, having a good ass time, please consider subscribing. You know the drill with that. You can also smash up the thumbs up button. That'd be great for me. I would really appreciate it. And if now you're into dividends, you want to look up some dividends, you should watch this video right here because I am going to tell you really safe dividends that you should probably add to your watch list or portfolio in 2022. I will see you over there. For the rest of you, if you've made it this far, you know I love you and I will see you in the next video. Bye guys.